How do businesses fare in a broken economy? Make no mistake, we're in a recession right now, and we've got businesses that are currently dropping like flies left and right. This is my event center. I felt it during the pandemic because I couldn't host events here. We've since recovered, but a lot of businesses in 2023 aren't. In today's video, we're going to explore what's happening in the business arena, and especially if you're a business owner, what's likely to happen, and how do you financially stabilize yourself until we pull out of these economics.
One shot, not a future before. Let's go.
What happens to businesses when the market goes down? Let me tell you, the easiest way to answer this question looks like this. Here's my business and the money I'm used to making, and now I make less, and now I make less, and if I make too little and I can't pay my bills, I go bankrupt. And that's what's happening left and right now. I'm gonna tell you right now, people are wondering, are we in a recession? And I always just say, cool, just tell me, are large businesses going out of business? And the answer is yes. Don't take my word for it. Let's actually break down what's happening based on Forbes. Investors are more and more confident that the US economy can avoid falling into a recession in 2023, so investors are feeling optimistic. That's one of the data points. Also, inflation has trended consistently lower for months, but interest rates are at 20-year highs, and a handful of economic indicators suggest that the economy isn't just out of the woods yet. And I'm going to tell you, there are a lot of businesses that rely on interest rates. They're either borrowing money, they're arbitraging money, and when those rates go up too high, money becomes too expensive. And when money's too expensive, their businesses break down. The New York Fed recession probability indicator also shows that there's still a 66% chance of a US recession in the next 12 months. I kind of laugh at that indicator. I think it's entirely rigged. We are in a recession right now. So let's talk about the top 3 things that are happening to businesses right now when we are in this kind of economy. Number 1, the US saw a total of 340 bankruptcies in the first 6 months of 2023. You might be asking, Kris, is that a high number? Is that a low number? I don't normally look at that indicator. I'm telling you, since 2010, this is a new high. Also, this is more than the first half of 2020 when the US went into a full lockdown. In other words, if we compare back to the pandemic, things are actually worse now than they were then, which is kind of mind-numbingly hard to believe. And number 3, it's the highest number of first half bankruptcies since 2010, meaning businesses are feeling the pain of higher interest rates. And so right now it's a little bit mixed. I think people are trying to stay optimistic and say, what recession? And on the other hand, guess what? Businesses are sucking wind. All right, let's actually look at the data from S&P Global. This is taking a look at US bankruptcy filings by year. The blue part here is basically up through June, the first half of the year, and then what it reveals in orange is what happened during the remainder of the year. 2010, this is the major culprit. During this year, we saw 468 business bankruptcies. That is a record. We've never seen that high since then. And then it was another 360 for the remainder of the year for a total of 828. If you start trending this line, it drops, it comes back a little bit. I want to pit stop what happened right here 2020, because during this very special year, we saw 333 bankruptcies. That was a new high. Basically, the pandemic was very, very bad for a lot of businesses that went out. The second half of the year was not that great with a high of 639. Where we're at right now is we just hit a new high. Since 2010, we're sitting at 340. And this has a lot of people worried. Is this an indicator saying, well, what's going to happen the second half of the year? Is it going to be short or is it going to be longer? Right now, it is picking up momentum from the year before at 176, the year before at 255. 340 could mean that we could have a large orange tail right here that could surpass and start getting us thinking, uh-oh, are we experiencing something as bad as 2010? Because that was a rotten recession. Now, it's important to note that not all recessions are bad for businesses. Some of us are hurt, others of us are not. Like earlier, I actually mentioned, hey, I'm here in studio, this is my event center, and during the pandemic, this was very bad for my business. It's weird, it's almost like when a local government says, you can't meet and you can't host events, that it's hard to make money with an event center. But all of my other businesses did really well because we brought some hardcore leadership that said, let's turn it around and we need to innovate ourselves out of this problem. 2023, though, for a lot of businesses is looking very, very different. Are there any businesses that succeed in a recession? And the answer is yes. There's a certain type of business model that actually does better than most others. And it's called franchises. And I want you to think McDonald's and Starbucks and Pizza Hut. It's like, do these guys, Burger King, Baskin Robbins, they've been around for such a long time. They ride out these recessions that go up and down. Many of these have been around for decades. Why are they still around? Well, franchises operate very, very differently than a company that is just a unit of one instead of a franchise that is a unit of many. For example, recessions and down markets often pose significant challenges for businesses, leading to closures, layoffs, and decreased consumer spending. However, the franchise business model has consistently displayed an impressive ability to weather these economic storms. And for just a moment, let's actually take a look at why this is happening and what you might want to consider doing about it. So what makes a franchise so resilient? Well, first of all, it's got established brand recognition. One of the primary advantages of a franchise is that during a recession, there's this strength in the establishment and a lot of people recognize the brand. And because of that, they trust that brand and so they want to keep consuming with that brand. Then you also have economies of scale. Franchises often operate on economies of scale, enabling them to negotiate better pricing for supplies and services. Bottom line is it increases their margin. And when the economy starts struggling, that margin gets squeezed, but there's still a margin. And then number 3 right here, they have established business systems. This is like the biggest advantage because a lot of them have been around long enough to have weathered through these storms. Franchise systems are built on standardized and proven business models, reducing the risk of starting a business from scratch. In other words, the businesses that are like, hey, we've been in business 1 year or 2 years or 3 years, they're still finding their way. They're establishing their systems. But those that have been around longer, or it's like we haven't been around very long, but there's like 50 of us or 100 in the chain, and we're all learning from each other, all simultaneously, making us a lot stronger, bigger, and faster. If you take a look at Shaq O'Neal or a lot of celebrities, they're like, wow, I made my money one way. Maybe it was a professional sport, maybe it was acting. But often what they do with their money is they dump it into franchise because they're looking for something scalable, something dependable, and something that is going to best ride out and weather weird recessions and economic storms. So franchises really become the answer for so many of us to financial freedom. They certainly are an important part of my category where I am trying to recession-proof as much as I can where I stash and keep my money. Like real estate does a lot to protect me financially. Franchises is another one of those categories. For example, successful franchising and licensing models enjoy a much higher success rate than most businesses, some as high as 92%. And I just want you to think for a moment how many businesses fail. I start a business, its likelihood of failure is pretty high in the first 5 years. But with franchises, super, super low. A master franchise or license can build a greater net worth than many other investment vehicles in a short amount of time. The ROI can be as high as 2,000% or more in just a few years. If you take a look at that, it's like, oh, so not only is there a higher probability of success, but there's also a higher probability of a higher ROI. And you know what? It's like, it's going to work and it's going to make more money. And finally, franchise and license models are built for growth. Multiplying your wealth becomes predictable and profitable as you follow calculated, proven systems. And that is just so enriching to my ears when I think of calculated and proven and systems in business. That's like nirvana for me. Uncle Kris has you covered when it comes to some of my favorite franchises. If you want to know what they look like, there is a link below, and what I'll share with you are some of the franchises that I'm pouring my money into. These are franchises that I believe in, and I think they're hip, they're hot, they're new age, they've got track record, they're pretty exciting. And if you don't want to know what they are, click the link below, and what you can do is fill out a form and say, hey, get with my team, and let me send you some of the hottest franchises today. You'll be blown away. Some of them take some money to get into, others have financing available, some take relatively little, and they do really, really, really well. So if you're trying to make the kind of money that can get you out of your job, or maybe make 10 times more money than your job, definitely fill in the link below and we will be in touch with you on it. But you know, there's a different group of people right now that are more financially screwed than anyone else. And this is the middle class. These are your W-2ers. These are the people that are relying on a system that is failing them left and right. And if you're curious what I mean by this and what you can do to save yourself from that financial hell, click right here.